Are you tired of watching your hard-earned money disappear in the stock market? Well, keep watching for these insider secrets to successful investments and profitable trades. Now, I'll tell you from my own experience, not only am I, the financial guy, the anti-financial advisor, right? Guess what? I actually used to teach people how to trade in stocks and options. And by the way, I was a complete novice. I did it wrong. But I did learn these few key points that actually helped me as well. So like number one, always have rules. Now, what's a rule, right? Rule begins with always or never, which is why it's number one rule is always have rules. That's a rule. It's having rules. You always want to have rules. It's always or never. Not so much like a maybe here, maybe there. That's more referred to as a guideline. In fact, if you ever watched Pirates of the Caribbean, if you ever seen that movie before, and Captain Barbossa, he's being told off by Elizabeth Swann about the Pirates Code. He said, first of all, you're not a pirate. Secondly, Pirates Code is not so much rules as they are guidelines, right? You remember that quote? Well, it's true. In investing, many people have guidelines, but they don't have really hard, firm rules. So when push comes to shove, or when emotions get involved, they break that rule right there. They start breaking their rules, and as a result, they start breaking their bank account because they lose a lot of money. So the first thing you gotta know is when you're doing investing, and I know this from training 200 people how to trade stocks and options, the ones that were most successful always had rules, and then they followed those rules. I'll even give you a bonus. One rule that Warren Buffett had was rule number one is don't lose money. Rule number two, follow rule number one, right? Now, if you're doing stock investing, here's the truth. You're gonna lose money. It doesn't matter how good you think you are, no matter how much analysis you do, whether it's technical analysis, fundamental analysis, or both. The truth is, you will still lose money, right? So even though that's number 2 point I'll give you is never lose money, it doesn't mean that you won't lose, but it does mean that you're gonna do this very thing, which is 1, you're gonna let your profits run, and then 2, you're gonna cut your losses short. Let your profits run, but cut your losses short. The biggest mistake many people make, and this is not just true of stock investors, this is also true of mutual fund savers, right? The people that put their money in their retirement accounts. They'll think, oh, the stock market's starting to go down. I've made money, but should I take it out? This happened after 2020. We saw 2021 take off, and then 2022 started to go down. And I remember talking to clients, and of course, we don't give any investment advice. We don't say you should take money out of the stock market or anything like that. But when they're asking me, hey, what do you think? I mean, do you think stocks will keep going down? Should we take money out? And I said, here's the deal. If you cut your losses short right here as it's going down, that can be good. Because the truth is, even if you lost a little bit, and some of these people might have lost 10 or even 20% over the last year. I said, even if you lost 10 or 20%, you're still higher than you were in 2020. You still have a profit. Let it go. Let it run. But of course, many times emotions get involved. They think, well, maybe it'll come back. And then when it comes back, then I'll get out. Most of the time, in fact, I'll probably say pretty much almost every time, when people try to play that game, they lose. All right? So don't get caught in that trap. If you want to make sure you don't lose money, the best thing you do is do that very thing, which is cut your losses short, let your profits run. Key thing to remember is this: you don't have to win more times than you lose to win. Let me repeat that. You do not have to win more times than you lose in order to win. So, for example, let's just say you have a stock that you bought at $10 a share, right? And let's just say that the stock has started to take off and it got up to $15. And you said, all right, this is great. And let's just say that only happens 3 times. So that $5 times 3 is $15. Now let's just say the other 7 times you lost money, but you put a stop loss, they call it a stop loss, where it automatically sells at a certain price. Let's just say that that stop loss was at $2 below, so at $8 a share. So it went from 10 down to 8, you lost $2, times 7 is 14. But because on those 3 winning trades you made $15, guess what? You still made $1, even though you were only right 30% of the time. That's key. It's kind of like baseball, right? You just got to hit it when it counts. That's the difference. You do not have to win more than 50% of the time to make money. You just have to do it right. So that's what I mean by never lose money is focus 1 on going for the, keeping your rules, but then 2 is really focus on letting those profits run, but cut those losses short. Like make sure you have those stop losses in place every time. And heck, even if the stock starts going up, move the stop loss with it. Move that stop loss up so that it keeps chasing along. So even if it all of a sudden comes back down, you still get a gain. Did you know I actually did that with Bitcoin? It's funny because Bitcoin, I know, is completely speculative. I invested just a little bit, just enough so that my wife wouldn't get mad at me. That amount, whatever that amount is for you, I did the same thing. I invested this amount in Bitcoin because I knew that Bitcoin had just came down from a big high. It had crashed it crashed about 70%. So I decided to buy in after it went down 70%. Bought at that point, and then as it started to go up, pretty soon I said, you know what? It's kind of coming up. I did a second thing. This is another bonus tip. I actually scaled out of the investment. Scaling out means as it goes up, you start taking some of your profits as it goes up. You still leave some in, but you take some out, especially if you're not sure how much more it's going to go. Obviously, the more times it goes up, the less likely it is to keep going up, right? It's just like any basketball type of team, or any kind of sports team for that matter. The more times they win in a row, the more likely the next time will be a loss, right? Same thing with stocks. The more times you win in a row, the more likely the next time will be a loss. So you might start taking some of those profits. I eventually took out all of my money I originally invested plus 20%, and then let all my gains just gamble away. And by the way, I still made money. I ended up tripling my money inside of Bitcoin, even though I wasn't really actively doing much with it. I was just kind of saying, oh, there's an opportunity. I'll move money back in and I'll take it back out. I could have made more if I left my money in, but I didn't want to. I wanted to take my profits and run. That's the key thing. So I know I've hit that one to death, so I'll stop on this one, but it means so much if you can just do that one thing. If you remember just this one thing, it'll make a big difference for you. So the fourth one is don't watch the news, right? Stay away from the news. Now you can read the news or whatnot, but do not trade based on news. In fact, that really leads me to my fifth tip, which is never trade on a hot tip. Whether that comes from a friend or whether that comes from a news station, never trade on that. If Jim Cramer says buy, 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 do not do it. Because almost every time you try to follow Jim Cramer, at that point, you've already lost. Okay? This is the same thing that's true too. If you get a hot tip, if someone's giving you a hot tip, that's the one thing you can guarantee is that it's no longer hot. Because no one gives a hot tip until it's already been hot. They've already started to make the money doing that thing. So by that point, the money's been made. And when they tell you to do that, this is where we call dumb money, right? I know Robert Kiyosaki refers to the same thing about dumb money going into the markets after everybody else has already made their money. That's what happens. You do not want to be the person that puts in dumb money where you trade on a hot tip. So I never, ever, ever recommend anybody to trade on a hot tip, no matter the source. No matter who they say they heard from so-and-so and they heard from that person, the whole telephone game comes back to you. Don't trade on that hot tip. And of course, like I said, the news can also be the same thing. Ignore the news. You can read it for different stuff, but never ever make investment choices based on what you're hearing in the news. Like I said, when the news comes out with stuff, usually it's too late. And by that point, you're in trouble. So be careful of that. Do not do that. Bonus tip is this, and this is kind of like the 202 trading I would teach some of our students, is do this. When in doubt, stay out. Or if you're already in it, when in doubt, maybe get out. So when in doubt, stay out. One thing I've learned is that your gut, your intuition, can sometimes help you see things that maybe you're not consciously seeing. I know there's sometimes that I would see a stock and I say, well, everything points to buy, 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 but something just didn't settle quite well in my stomach. And I thought, well, it's okay because rationally it makes sense. And then I'd buy it. And guess what? Some crazy reason it would go down. And vice versa. Sometimes it'd be like, I should probably sell now. But but I gotta keep it going a little bit more. And then it starts going down. Often when you start to really get into this, pay attention to your intuition. If something doesn't feel right, don't do it. No matter what, no matter how much money you think you can make, if it doesn't feel good, don't do it. Again, when in doubt, stay out. Or if you're already in something like that, when in doubt, get out. Huge thing that's not just saved me a lot of money, but also made me literally, not just in the stock market, but in other places, millions upon millions of dollars I was able to make because I went with that intuition, that gut feeling. That can be true almost every time. I don't know what it is. It's almost like a sixth sense, but it's almost as if your intuition can somehow sense something even before it happens. So follow that intuition. All right, so let me recap these rules here. Number one is always have rules. Remember, rules focus on always or never. Always have rules. Number two, along with those rules, is never lose money, right? Never lose money. Focus on the wins. Focus on the gains. Going for the things that you think is a sure bet. Going with that little bonus I gave you. If it doesn't feel right, when in doubt, stay out. Focus on when it feels good. Number three is don't watch the news, right? Don't let the news dictate where you invest your money. That is the worst way. In fact, that's usually the easiest way to lose more money. And that even goes along with that next one, which is never trade on a hot tip. No matter who the source is, Never trade on that hot tip because by the time it's hot, it is not, all right? And of course, the big thing I told you to remember is cut your losses short, but let your profits run. Guys, if you thought this was good, check out my next video on stocks, which is what to invest in while stocks are down.